Welcome to the question clip on Chapter 4, and the question that we're going to be dealing with is on Woodcraft Furnishers. It will be advisable to follow in your question book with the suggested solution as well. If we face an extensive question like this, we always start by reading the required part, and in this case the required part includes quite a number of items. I'm going to break up this question into certain sections and deal with those separately. In the required part, they ask us to use the information above of Woodcraft Furnishers to prepare the following in their books. We are just going to deal with the journals, and that will be the first cash receipts, cash payments, petty cash, creditors, debtors, and general journal. So those will be the items that we deal with. Whenever you face a question like this, it's a good idea to draw up your frameworks. So we're going to draw up the columns that we need for the cash receipts journal, cash payments journal, and all of the journals mentioned in the required part. If we can go back to the question, Woodcraft Furnishers trade in handmade furniture. The perpetual inventory system is used and the entity maintains a gross profit markup of 50% on cost. Very important information in this first paragraph, so please don't skip this. For the perpetual inventory system, we know that we keep track of inventory in the inventory account with a corresponding cost of sales entry for any movements in inventory. They tell us that the gross profit markup is 50% on cost. So if we need to do a cost price or selling price calculation, we'll have to use this profit markup to manipulate the given amounts. That will become clear once we start with the transactions at the bottom. The following balances appear in the books of the entity on the 1st of April 20.6. It's important to just briefly stand still at all of these amounts, as some of them will influence certain parts of the questions where it will not have an influence on other parts. These are balances on the 1st of April, and we need to do the transactions for the month of April. In our journals that we're going to prepare, we do not have to start with any of these amounts as opening balances, because if you recall the accounting process, each month will have its own journals to have the entries entered into. So on the 1st of April, these totals and balances will appear in the general ledger only. Question clip 2 will deal with postings from the journal to the general ledger. All of these amounts reserved for general ledger. These 3 balances are reserved for the debtors ledger, which we're also going to deal with in a later clip, and these 3 balances for the creditors ledger. Let's start with transactions for April. In transaction number 1, we purchased furniture or inventory of 42,400 and furniture polish and oil of 320 Rand from Craft Interiors and received invoice number 331 for the amount due after 20% trade discount on furniture was allowed. The polish and oil was used for the furniture in the storeroom, so not for sales purposes. Quite a few things happening in this little paragraph. And if you do not read properly, you're going to run into calculation errors. They tell us that we purchased the inventory of 42,400. And then if they mention here, the amount due after 20% trade discount on furniture was allowed. The trade discount was not on the total invoice, it was only on the furniture. 42,400 was the price of the inventory, but we also received 20% trade discount. Now the 2 separate types of discount that we can deal with, trade discount and settlement discount. This trade discount is on the spot discount. If you think about a purchase of your own, If you buy something at Pick and Pay, for instance, and you see a notice there, you qualify for 20% discount. Will you pay the full amount first and then they give you the discount back? Or do you only pay the amount after the subtraction of the trade discount? We only pay the amount after subtraction. So there's no separate entry for trade discount. We are going to include the amount for the inventory after we've already deducted the trade discount. They mentioned that this purchase, we received an invoice only. So there's no mention of a payment of cash. Therefore, this transaction will be accounted for in the creditors journal for April, and the creditors journal that I've already drawn up for us for April 20.8 will look like this. Now we have to complete document number, day, details, the folio numbers, only reserved for the details over here, creditors control inventory, so we have columns for creditors control and inventory. The document number on the question was invoice number 331, so we will include our document number. The day of the transaction is the 1st. The details is reserved for this creditor that you purchased it from, and that is Craft Interiors. The folio number will only be completed once we have a creditor's ledger account for Craft Interiors. The total invoice amount is not known to us at this point because we purchase not only inventory but also other items. Therefore, in our creditors control, we're just going to leave that open. The inventory amount will not be the 42,400, but it will be the 42,400 after a deduction of the on-the-spot discount. So that will amount to 33,920. Then we also purchased furniture polish and oil for 320 Rand. In our sundry accounts, we now need to link this 320 Rand to another general ledger account. So in the details here, we will include account names. They told us we're going to use this in our storeroom. Therefore, it will be consumable inventory. If we take this 320 that we owe for consumables plus this 33,920, the total amount due to Craft Interiors, 34,240. Double entry again, we have a credit in creditors control, and then we show the corresponding debits in inventory and in consumables. Next transaction. Number 2, we paid 200 Rand per check, number 088, for the delivery of the inventory purchased from Craft Interiors. Paid per check, let's quickly identify the journal. A check is as good as cash, so this will be money flowing out of the entity. I need to include this transaction in my cash payments journal. So if we can go to the preset cash payments journal, you'll notice that the first 4 columns of all the journals remains the same with the document number, day, details, and folio, and then all the analysis columns that will be determined by the journal as well as the activities of the entity to generate the column headings. They tell us we paid 200 Rand per check number 088. So our document number is check number 088. This happened on the 2nd day of April. The details here, if they give you the name of the entity to which you issued the check, it will always be the third-party name that you put in there. If there is no third party mentioned, then you'll use a descriptive term for details. In this case, we paid it to Craft Interiors, so we can write in our third party. And the amount is 200 Rand that we paid per check. So we paid 200 Rand in bank. And now we need to determine for this credit, where will I put the corresponding debit? This 200 was for delivery of inventory purchased from Craft Interiors. Remember, we are applying the perpetual inventory system. So in the inventory account, we want all the costs incurred to get the inventory to a condition or a location ready for sale. This 200 Rand can therefore not be included in delivery fees, but it will form part of the cost price of the inventory of 200 Rand. The next transaction on the second, here they tell me that we have cash sales of 24,000 Rand. You'll see they don't mention a source document, but you need to know from your theoretical background that for cash sales, I will use a cash register roll. Therefore, my source document is a cash register roll. I've got cash sales, and this will have to go to one of my cash journals, either cash receipts or cash payments. This is a receipt of money, so we'll go to our preset cash receipts journal. In the cash receipts journal, we're going to have to put in our document number, cash register roll. The date for the transaction is the 2nd. For cash sales, we do not keep track of the names of the individuals to which we sold. If you buy something cash at Woolworths, they do not write down your name. Therefore, we just use a descriptive term for details, which will be sales in this case. Then in our analysis columns, analysis of receipts is like the till. It represents the till where you put the money in. In this case, we received 24,000 Rand in cash. For that debit, I need to show a corresponding credit. This income that I've earned is sales. I will put my 24,000 Rand into my sales column as well. And remember, here we have a column for cost of sales. Perpetual inventory system. As soon as we sell the items, we need to account for the cost price of the sold items as well. You recall, they gave us the profit markup as 50% on cost price. So if we can quickly have a look at our 6-block calculation, 50% on cost. So cost will be the basis, which is the 100%. The profit markup is 50. Therefore, the selling price will be 150%. If they give us the selling price of 24,000 and we want to determine the cost price, our formula will be the 100 out of the 150 times 24,000 Rand. That will give us a cost price linked to the selling price of 24,000 of 16,000 Rand. That 16,000, when included in the cost of sales column, will represent a reminder of a debit in cost of sales and a credit in inventory. Remember, we don't have an inventory column here, but cost of sales is the reminder of the second set of debits and credits. In the cash receipts journal, if we have only one cash transaction for the day, at the end of the day, the cash will not be kept on your premises. That's high-risk items, which we don't want to keep. So at the end of the day, once we take this cash receipt and we make the deposit into the bank account, this 24,000 will move from my analysis of receipts column into my bank column. If you had more than one cash transaction for the day, you will only move the total analysis of receipts after the end of the day to the bank column. Next transaction. Transaction on the 5th, we paid Knysna Wood 8,000 Rand less 5% settlement discount. These settlement discount type of questions can be a bit confusing if you do not read the English and understand and interpret that correctly. Whenever we pay an account, three amounts come into play. We can either have the full account, or they can provide you with the amount that you paid. They can also mention the discount. So we need to determine which one of the three amounts was mentioned in the line item. Paid Knysna Wood 8,000 less 5% settlement discount. You'll see that there are no commas or no indications to stop reading. So if we read this sentence, that 8,000 Rand is before we've deducted the 5% settlement discount. They don't say paid Knysna Wood 8,000 and received 5% settlement discount. So in this case, the 8,000 Rand was the account, and we received 5% discount. So we would only have paid 95% of the total account. This transaction will be entered in the cash payments journal. So if we can go to the cash payments journal, complete this transaction. They again didn't give me a document number, but my document numbers, they are sequentially numbered for control purposes. Therefore, I can include document number of the next check. This transaction occurred on the 5th. I made a payment to Knysna Woods. In my bank column, that will be the cash amount that I've paid. I also have a creditor that I have to decrease, and they mentioned settlement discount received. Now the 8,000 Rand we just discussed, that is the account. So that's not the cash part, that's the account. Therefore, we will put our 8,000 Rand for creditors control and not for bank. If we then calculate 5% of the 8,000 Rand, that will give me my settlement discount of 400 Rand, leaving me with a payment necessary of only 7,600 Rand. For double entry purposes, because remember, a journal is just a summary of similar debits and credits. This bank column will result in a decrease in bank. Assets will decrease on the credit side, so all of these entries will be representing a credit entry in bank. If I have a credit entry in bank, the other analysis columns will refer to the corresponding debits, because this is the leg that they all have in common. If inventory is then a debit, if I pay for inventory, my inventory will increase. If I pay for creditors, I will owe them less. Therefore, my liabilities will decrease on the debit side. Can you see the pattern? Now they linked the settlement discount with the payment that I made to the creditor. But settlement discount received is an income item. Income items to the benefit of the business will increase my profits and therefore result in a credit entry. I cannot leave this 400 Rand like that. Otherwise, if you look at the journal, credit corresponding debits, you would want to debit this 400 Rand. So we indicate that this is a credit, making use of a bracket. Wonderful. I'm not going to carry on with each transaction. I've identified a few of the crucial transactions that we need to have a look at. So the next transaction that we're going to have a look at will be the transaction on the 11th. Received a credit note number 12 from Office Mart for equipment returned 350 Rand. Now a credit note as a source document can either be for returns to the entity or items that we were not satisfied with that we returned to third parties. They tell us that we received the credit note, therefore someone issued the note to us resulting in a return to a creditor. So the journal that we have to put this transaction in will be the creditor's allowances journal. I have a preset creditor's allowances journal for us as well. Again, the first 4 columns more or less the same as all the other journals. Credit note number 12. The date of the transaction is the 11th. I returned these items to Office Mart. And the amount that I will owe them less is 350 Rand. Remember, creditors' allowances, if I return to them, I will owe them less. So this entry will result in a debit in creditors' control. Now I need to show the corresponding credit. I returned equipment to them. This equipment will be the corresponding credit. And I give the name of the account that we need to influence. The next transaction that I identified to discuss with you is the transaction on the 17th. Second transaction, we received 4,000 Rand from Asia Ping and allowed 5% settlement discount on the amount received. Remember your 3 amounts that can be involved in this transaction: the account of the debtor, the settlement discount, and the cash part. Let's read the sentence again. Received 4,000 from Asia Ping. If we receive something, that's cash. So that 4,000 is the cash amount. And beyond this receipt, allowed 5% settlement discount calculated on the amount received. So if this is the bank, we calculate 5% on that 4,000. The 2 amounts added together will determine the decrease for debtors control. If we receive money, that will be entered in our cash receipts journal. So if we can go back to our preset cash receipts journal. The document number will be receipt number 113. That you can pick up from previous transactions. Remember, I'm not doing all of the transactions. This transaction occurred on the 17th. The details will be the name of the debtor. In our bank column, in other words, in our till, we will just put the cash amount, which was the 4,000 Rand. If we then calculate the discount on this receipt amount, that will be 5% of the 4,000, resulting in a settlement discount granted of 200 Rand. My debtors control will therefore decrease with the cash and the discount that was granted, 4,200 Rand. Remember, in our cash payments journal, settlement discount received was put in brackets to indicate that it's not the same as all the other analysis columns. Exactly the same rule will apply here. This will be a credit in debtors because they will owe us less, corresponding debit in bank, and to indicate that this is a debit amongst all the other credits, I will put that in a bracket as well. Next transaction on the 19th. The owner took a chair with a selling price of 2,400 for private use. Let's first identify the journal that we need to account for this transaction. If the owner takes inventory, that is not a cash transaction, so it can't be in the cash receipts journal, cash payments journal, or petty cash journal. It's not a sales transaction. It's not a return from a debtor. Neither is it a credit purchase or a credit return. So all of these transactions that will not fall into my other journals will be accounted for in the general journal. Layout of a general journal. I have my column for my date. I also have lines open that I can include account names, and then just a mere column for debit and credits. Back to the duty concept and the basic accounting equation, so we just deal with our debits and credits. If the owner withdraws, we will decrease equity, and that will happen on the debit side. Remember to always start your journal entry with the account that you're going to debit. You also indicate that by writing it directly next to the margin. So the account that we will debit will be drawings. You'll see it's next to the margin. The date of the transaction is the 19th. And now we have to indicate what the owner actually withdrew. In this case, it was a chair, which was inventory that we could have sold. And because it's the perpetual inventory system, we keep track of inventory in the inventory account. This indentation indicates that this is the account that we're going to credit, and that will be our debit entry. They mention a selling price, chair with a selling price of 2,400. So we need to first convert that selling price to a cost price, because in the inventory account, we only work with the cost price of the items. The business would have sold it, so the inventory will decrease with only the cost price. Remember, our profit markup was 50% on cost price. So if I want the cost price, I will start with the 100 divided by the 150 and multiply it with the selling price of 2,400 Rand. That will give me my cost price of 1,600 Rand that I can include on the debit side as well as the credit side. You'll see that we have no source document column for a general journal. The reason for that is our journal narration, the little discussion that we have at the bottom, will serve as our source document. So you have to write a description of what happened. To be able to replace a source document. So that's the complete general journal entry. The next transaction that we're going to have a look at is the transaction on the 23rd. On the 23rd dimension, a customer who bought furniture for cash returned a defective chair, and we refunded the customer 1,500 Rand. A refund will have a resulting entry in our cash journals. And if we pay the customer, that will go to the cash payments journal. If we have a look at our columns in our cash payments journal, we have got a column for bank. The refunded amount is 1,500 Rand. So on the 23rd, our document number followed on all the other ones. On the 23rd, we do not know the name of the customer. That's why we can use a descriptive term there. The 1,500 is in bank for the refund. That will be the credit entry. And now we need a corresponding debit in sales returns or debtors allowances. You'll see that we do not have a column for any of those terms. So we're going to create the account in the sundry column. 1,500 Rand for our corresponding debit. And we give the name of the account in the details for debtors allowances. This was a return of a sales item. Now, if you look at the cash receipts journal, as soon as we sold, we also had a corresponding second set of debits and credits for the cost price. In the cash payments journal, we do not have a column for cost price, so we cannot have the corresponding reversal of the cost price of these returned items. As soon as we run into trouble, including something in one of the journals that we've already discussed, we convert to the general journal. In the general journal for this 1,500 Rand, I now need to also reverse the cost price linked to the 1,500 Rand. And that transaction will be in the general journal. On the 23rd, the inventory was returned. That's why inventory will be on the debit side. Cost of sales is a cancellation of the cost price of the sold items. It was calculated using our formula, 1,000 Rand debit and credit for inventory and cost of sales. The last transaction that I'm going to discuss with you is the transaction on the 29th for journals. And there they mention that you charged 50 Rand interest on the overdue account of S. Breed. S. Breed is one of our debtors. They do not mention that we receive any money. It's only charging 50 Rand interest. However, we apply the accrual concept. So as soon as we've earned the income, as soon as we charge him with the income, we need to account for that 50 Rand. This is not money received, so it can't be in the cash receipts journal. This is not a sale to a debtor, so it can't be in the debtors journal. It's not a return from a debtor. So all of those items that cannot be included in one of the other journals will have to be included in the general journal. In my general journal, on the 29th, I increase whatever that person owes me on the debit side, debtors control, and remember to put the name of the individual debtor as well. You'll see later when we draw up the general ledger versus the debtors ledger, we need this information for the two separate sets of records. So it's the debtors control for general ledger as well as the name of the debtor for the debtors ledger. Then we credit the income item that we've earned, interest income. We do not call this interest received because it's not cash concept that we apply in accounting, but the accrual concept. The 50 Rand will be on the debit and the credit column of the general journal. Look out for the next question clip where we will be dealing with posting in this question from the journals that we've just drawn up to the general ledger and debtors and creditors ledgers.